Good morning, it's Harvey Jackson. Just going to get through some news items here today. Trump talking in the Oval Office. I don't know if it was yesterday or the day before, but he finally admits that tariffs are getting partially paid by the USA citizens, thus a tax, and that's why the Supreme Court is likely to. It seems a little bit more likely that they're going to rule against them. And taxes are supposed to be implemented by the Congress, so he's going to look for other tools in the toolbox to keep the tariffs on, of course. This is the article. On Thursday, acknowledged the U.S. Customers are paying more for goods because of the tariffs he has set, a shift in rhetoric, even as he insisted the policy has benefited Americans overall. And it has. Like you can see that just the investment in the U.S. and moving businesses, even if it's Stellantis and I'm going to say all of Carney's Brookfield Asset Management. When he was a part of there, he actually moved to the U.S. To take the business down there as well. Yeah, so there's a whole pile of conflicts of interest there, but I guess nobody, the RCMP is too scared to probably push that a little bit. So anyway, um, Argentina is actually wet ahead of the weak La Nina season, which is probably going to get them through by this weather analyst prediction here, which would be good, but it's extremely wet at this point too. So China starts work on easing the rare earth export rules, but short of Trump hopes. So there's still some restrictions. It's still going to have some licenses for the year, and Trump is still trying to push it as if it's going to go farther. And like if we're going to talk about Trump and the differences between what the Chinese believe that the buying pace for soybeans, or if it's the rare earths, obviously I don't think it's just a language barrier. It is everything is really good because he's such a master negotiator, and I think some of that is lost in translation for China. It is not quite as easy of it's not going to turn on a dime, and obviously the purchases haven't really shown up in the books yet, but they will eventually reopen the government, and you will see that if there's orders in there and if they happen there. Dollar heads for a modest weekly rise, so over the week, but a lot of it's attributed to this uncertain government shutdown as far as layoffs and you name it. So they might be cutting one more time, possibly just because of the labor problems. World food prices fall for the second month in a row. But here's another or point that they made in a separate report, the food FAO, and again, stupid acronyms, but Food Associated, I don't know what the heck it is, but anyway, they said that the world cereal production is at 2.990 billion metric tons after projecting 2.971 billion tons last month. So that's a shift of increased of cereal production. That's including rice, of course, as well. Karen Braun posted this, and you can just see that the export pace is ahead of normal at this time of year. So there's still exports coming out of Brazil. Um, this was from Leffield, and you can just see here the last few months. That's our total oil, Canadian, our canola oil total, and there is no biodiesel. You can see there's no blue and there's no green for renewable diesel either. So the canola used for biofuel in the U.S. is actually just not getting used because of the 50% RIN. How is that going to impact us going forward is the question, and if that's going to continue. Quick look at the weather. Looks like BAM weather put this out that there's going to be shots of cold and snow going into the Great Lakes area, all extending all the way back to middle of Saskatchewan on the east side. So I'm going to be in the cold for sure. This is just the last 48 hours. There was still snow coming down last night. I'm just not sure if it recorded, but there's a couple inches here actually. So this is a 7-day outlook. It's still looking like there's going to be a band of snow. And some of the um, Calgary going down into Swift Current kind of area. Uh, just the weather anomalies, and you can see that it actually looks like it's going to get dry there in the northern part of Brazil. Canola is up $3.80 on the front month, so that's $637. Rapeseed is down to $4.74. Soybean oil is actually flat at $49.45. Palm oil is down a little wee bit as well at 41 100 ringgits. Crude oil is just right at the $60 a barrel, and soybeans are slightly up at $10.43. And your wheats or spring wheat is just slightly positive with a cent and a quarter up, but your Kansas and your other wheats are down. Corn is slightly down as well. Just have a look at this. You can see that the market has trended down, did not get to that previous high that we had there. So that's not a bull signal. Our bullish signal is make a higher high. We have not done that yet. We did creep up here and then pull back, and that's on the January contract. And if you look at the November contract, same idea. Did not make a higher high. It's making a lower high. Still caught above the 200-day moving average, which is a good thing. Maybe getting supported there. The European rapeseed pulled below the 200-day moving average, and some of the medium-term moving averages seem to be supporting it there as we speak. The price differential between European rapeseed and Canadian canola is $136 in Canadian dollars. Soybean oil. This is still the trend going down. It seems to be caught at this current value and still dropping. As we speak here. Crude palm oil, same idea, but it started to kind of trade sideways after a good slide that it's had earlier on in the month or end of last October. And here's your crude oil, just looking at relative value. It's actually towards the bottom end of this last year of trade. Soybean futures had its high. Now it looks like it's going to try to maintain these values, which would be a good thing for soybean sales that need to get made yet. Just to dive in a little bit deeper, just looking at the last, I'm going to say last month, but just in an hourly chart, and this does still have a downward trajectory as well, just when you look at the hourly. Soybean futures for November, still a lot higher than where some of these previous highs are. I would still look at anybody that's able to lock in soybeans for next year. Still look at locking in right where we are, even as $10.99 I think it is at the moment. So pretty decent values for next year. Just a quick look at the Canadian dollar. Constantly going down here. Now, are we going to keep going down is the question. Now, if it does break through, we're probably looking towards that 70-cent. U.S. dollar index, the $100 or 100 index seems to be the cap for it for sure. Quick look at wheat, trading basically sideways here for a short while here, and it could try to break above that trend line. And again, trend lines are drawn differently by everybody. You slightly skew up here, and all of a sudden then it broke through. But I'd like to see it get above that trend line and get above the previous high that we made here to change the trend. Kansas pulled back, and it got above that trend line, got a little bit closer to the 200-day moving average, and then retreated. And that could be because of some of the information from the United Nations food stockpile that I mentioned earlier in the article there too. Milling wheat, same idea, same as your Chicago. Corn futures have pulled back a little bit as well, but basically just chopping sideways following that trend line down. Quick look at live cattle. It had expanded limits there yesterday, did not trade the full expanded limit, and still looks like it's on its way down yet. The same thing with the feeder cattle. Lean hog futures following that complex as well. And that's all I have for you. November 14th is going to be a release for the USDA. The government's going to post some data, and that's all I have for you.